Okay, record. Okay, here we go. So anyways, thank you very much for all the, our fellow Americans around the world joining us for this webinar. We know that the circumstances are not optimal, and I wish we could be meeting and speaking on better, better circumstances, but we'll try to shed a little bit of light, a little bit of a ray of light on what is otherwise a really tough period that we're all going through. We're going to be talking about tax-related updates related to the coronavirus. And my name is Monty Silver. A lot of you out there may have participated in other webinars. I'm a U.S. tax attorney focusing on representing Americans and non-Americans on U.S. tax issues. Control foreign corporations through which we run our businesses, estate tax, real estate investing in America, things like that. 2.5 years ago, I got involved in tax advocacy when the transition tax and GILTI were passed. Those who are involved that have businesses know what I'm talking about. And over the last 2 and some years, we've been very successful actually in bringing about change, getting all kinds of exemptions, temporary and permanent, from the Treasury, from senior people all the way up to Mnuchin. So we were quite successful. And what we'll talk about today was also something that was quite successful, the fact that we are able to even talk about the benefits that we Americans can get from the American government. It's like, are you serious? We can actually get something. It's not only, what can I give to America rather than what can they give to me? So we have done a lot, and we're happy to present that today. Katie, why don't you go introduce yourself and Bright Tax?
Sure, thanks, Monty. My name is Caitlin Minot. I am a CPA and managing partner at Bright Tax, which is a cloud-based tax preparation firm that services the Americans who reside outside of the US in something like 200 countries around the world. We execute the tax preparation exercise for our clients regardless of where they may be, and we've aligned with Monty in many of the advocacy issues related to controlled foreign corporations, as he mentioned, and we're glad to be here today to share with you the benefits of the CARES Act and the recent changes that the IRS has rolled out this year related not only to Americans in the States, but Americans who live outside of the US, such as yourselves.
And now that we're recording, this is in cooperation with AERO, one of the 4 American organizations that represent Americans overseas. It's based in Paris. I'm in charge of the tax advocacy there. It's all nonprofit. Everything we do is nonprofit. And AERO goes to Washington once a year and it engages in a whole bunch of stuff regarding advocacy for Americans abroad, and we're very happy to have them. I will say just regarding Bright Tax, I've never done a webinar before. I've done many webinars, but not with 2 people around the world and sharing screens, so it's actually worked out pretty well. But I really appreciate Bright Tax's assistance. As you'll see, there's very little high tax legal that I'm going to talk about today. Mostly it's going to be Katie talking about the nuts and bolts of this. And when I was doing some lobbying on this and trying to understand what this is all about, a lot of the nitty gritty you'll see. I don't understand the filings and all that. And Katie and Greg and Hugo were very, very generous with their time in going through this and helping me understand the nuts and bolts, me helping shed things for them. So I really appreciate that. I don't usually do this every day with anybody, but it was a good cooperation. I appreciate very much. Okay, so let's start with the agenda and introductions we've done. Coronavirus relief, which is the core of what we're going to be talking about today, the money that we can get from the US government. and then the deadlines, the extensions that are available to us because of the corona crisis. This presentation covers general concepts of U.S. law, and it is not legal advice, tax advice, or accounting advice, and Arrow takes no responsibility for the content. There will be going to be many questions. We'll try to answer as many as we can. Again, ask them through the QA, and Katie will do her best to answer them. But again, it is not formal advice here. Okay, so this is the very short part that I talk about. So what we have is a very unique situation. I think we can all agree that not many of us were shocked that actually we learned that we were going to get something from Uncle Sam rather than just the headaches of FATCA and the tax annual compliance. So in essence, what happened that we were entitled to even get anything? Well, there's two key provisions in this new law that came out, and which were sort of the focal point of advocacy and fighting for our rights. The first one had to do who benefits from this law, and the key term here is eligible individual. As you'll see with Katie when she talks, we're talking about individuals, not companies. We people, real people, get a rebate, get money. And what is an eligible person? An eligible individual is someone who's not a foreigner. This is a very, very, very broad, it's basically everybody's eligible other than specific people who are not, meaning foreigners. But they could have very easily written here that only American residents are subject, are going to get this benefit. That's what I personally, without the law being an advocacy of myself and Arrow and ACA and Democrats abroad and Republicans overseas, that's what would happen. But it was from day one, it was drafted to include everybody, meaning Congress really was thinking about, among other people, us, or else they wouldn't have worded it this way. And that is the result of years of advocacy, that drilling into Congress and Treasury that we're people too, and it's finally hit home. This is something that's not trivial at all. And if you're thinking about, oh, I'd like to get access to these webinars, so maybe I will join Arrow, just think that this benefit would not have happened if it wasn't for the four organizations really pushing. It does help. It takes a long time, but it does help. The second term that really was crucial, and this was only the very last minute, the benefit was limited only to people that had U.S. tax liability. So in the pre-final version, it was only to the value of the benefit was lesser of the U.S. tax liability or 1,200 in taxable income. Okay, meaning expats would not have gotten this, not because they're not eligible, but because we never owe taxes, because we pay a lot of taxes in our country of residence. So we would not have, in the pre-final version, we would not have been eligible, but it really, like 24 hours before this went out, a lot of effort was put into this by many, or not only expats, but many, even in America, a lot of lower income people would not have gotten this benefit because they don't pay taxes, they don't earn enough. So this was included, this tax liability condition was excluded, and therefore we benefit, and it was quite satisfying to those who were involved. There's other terms and conditions now which Katie will get involved in, and with that, I now transfer the floor to you, Katie. Go ahead.
And speaking to your first point, something that we're hearing very frequently from our clients over the last few weeks is that in the countries that they do reside in, because they're not citizens, in all cases, of course, they're not eligible for local benefits. So the stimulus that their country of residence is providing is not necessarily applicable to them. So it's really valuable that finally the IRS is saying, or the US government is saying, yes, you are eligible because of your citizenship, not just taxing them because of their citizenship. So that's an important provision, absolutely. And now we'll get into some of the details of the of the rebate, which of course is probably the most important point for most of you, and the reason that you're joining us here today is to find out what you as an individual taxpayer are eligible for as far as the rebate goes. Let's talk some numbers. There is a credit of $1,200 available for single taxpayers and $2,400 for jointly filing taxpayers. So if your filing status is single on your tax return, you're eligible for $1,200, and married filing joint is $2,400. There is an additional $500 to be paid out and added onto that rebate amount if you have a dependent child who is under the age of 17, so 16 years old and younger as of the filing date. In order to qualify for the rebate or for the credit, you must have a Social Security number, a valid Social Security number. A tax ID number, also known as an ITIN, does not qualify you for the rebate. And that's an important point for those who are not US citizens or who are not US tax residents. Some of the criteria that are applied in determining whether you are eligible for these payout amounts is your AGI, your adjusted gross income. That number can be found on your US tax return. And at the point where you as a single filing taxpayer are earning more than $75,000 in adjusted gross income, the amount that you are eligible to receive begins to phase out. That threshold is $150,000 for those who file jointly and $112,500 for head of household filing statuses. So at those levels, the rebate amount begins to phase out. For single taxpayers, it is eliminated completely at $99,000 of AGI. So the credit, how does the IRS evaluate your personal tax situation and say, does this person receive the credit or not? Because of course, every year your income looks a little bit different. The current guidance that we have and the way that the legislation is written says that the credit is paid based on the AGI on your 2019 tax return. That's interesting because we'll talk a lot later about deadlines, which of course have been extended for the 2020 tax season. Our reading of the legislation says that if you did not file a 2019 tax return yet, the Treasury may issue a check based on your 2018 AGI. The key wording "may" is important because we don't have, final clear guidance on whether people who have not filed 2019 will be eligible based on their 2018 return or not. Monty, do you have
something that I personally have looked at the law very carefully. The law is that the Treasury must send out the checks to 2019 filers and may for 2018 filers. What's in a word? Don't know. If it comes down to having enough time, they're saying that within 2 or 3 weeks they'll have all their systems integrated where they'll be sending out checks and all that and what have you. I've been working with the IRS for a while. I know that their computers are all old legacy computers. They're all at home now. Nothing's happening. So there's an uncertainty in the air. Uncertainty is in the air. There can be no definitive answers on this on that issue, sure. Especially if you're an expat. Especially if you're an expat. If you're living in Washington or somewhere or in New York, where whatever, the chances are greater. But again, uncertainty. Don't know. Maybe yes, maybe no.
Exactly. What we do know is that the Treasury intends to send out the checks and must send out the checks per this legislation by the 31st of December 2020. So by the end of this calendar year, the checks should have gone out appropriately to the relevant taxpayers. So let's go through a very, very basic example to better understand what this relief, what this rebate could potentially look like for you, for somebody who lives outside of the US. John and Mary Smith are both US citizens who file a joint tax return and are residents in the UK. They have 2 dependent children, Susie, age 6, and Joe, age 8. In their 2019 tax return, their AGI, their adjusted gross income, is $100,000. I know this question is going to come up, and so I'll address it now. That is, if the adjusted gross income is before or after the foreign exclusion, and the answer is AGI is after the foreign exclusion. So potentially, if John and Mary Smith are taking the foreign earned income exclusion, their income could be $300,000. It could be much higher, their wage earnings, just for purposes of an example. But because their AGI is at $100,000, they become eligible for this stimulus check.
So again, I'm a tax attorney. I don't follow, necessarily. So just so it's clear. So let's say the foreign earned income exemption is $100,000. That comes off the top, and that's what left is the adjusted gross income. Is that correct?
That's correct. So So in theory, people who are living outside of the US and taking the foreign exclusion at higher income levels could be eligible for this rebate, where if they were earning that same income amount and residing in Massachusetts, they wouldn't be otherwise eligible. So in that case, it's a win for those sort of filers. Right.
There you go.
So here's their rebate. This is the amount they're eligible for. Oh, sorry.
Oh, sorry. I'm sorry. My mistake.
There we go. The amount that they would be eligible for is $2,400 for their jointly filed tax return, plus $500 for Susie, $500 for Joe, bringing us to a total of $3,400 rebate. So it's a simple example, and of course, everybody will have their own variations, but that is what the rebate would look like in this case. A lot of questions that we're seeing very frequently involve how this is paid out, what happens if my information in the IRS system is not up to date, my mailing address, my direct deposit information, etc. The IRS has communicated via their website that they will be rolling out a system over the next few weeks where taxpayers can go online and update their direct deposit information, keeping in mind that if this rebate is to be direct deposited to you, it needs to be deposited into a US bank account, and that bank account needs to be in your name as the taxpayer. I've included here a URL to the IRS website that continuously is updating as new changes become available. So we're recommending to our clients to check in on that website frequently, as things are literally changing every single day, and that's a really great source of information. As far as address information, we'll touch base later on what you need to do to update your address, but the IRS will have on file whatever address you used to most recently file your US tax return.
So what you're saying, just wanted to, so if I haven't moved, but if I'm if I filed 2018 using one address, and I've moved since then, that's
where your check's going to go, assuming they're going to mail it back to you.
Okay.
That being said, the IRS will be sending out a notice following checks, as they do with all checks that they send out, 3 weeks later. So let's say your stimulus check goes out on week 1. Week 4, you're going to be getting a notice in the mail that says, we sent you this amount of money to this address. Please just so that you have that information in your understanding. And should it come to that, there can always be a check tracing process. As we all know, international mail is not as reliable, especially when it comes to payments and checks. So that will be something we're continuing to follow up on, but do keep an eye on that IRS website, because if you have a US bank account, that's definitely the way to go.
So yeah, and I've just been reading the news, as you know, that in America, whenever there's a crisis, the scam artists are out on the street collecting fraudulent Social Security numbers, making fraudulent filings, and this is, so not only do they have to roll this out, but they have to roll it out in a way that, and this is going to take time, you know, so there's all these things that have to happen. But one thing that did come up today was the issue of having a U.S. bank account.
Yeah.
And I have one. I conduct business also in America. But for people who do not have a U.S. bank account and don't really want to have a check mailed to, who knows, 4 corners of the world, what can be done to help them?
Sure, good question, because many taxpayers, well, many of our clients have never even lived in the States, so they have no reason to have a US banking account. Our clients, the solution that we offer is the relationship that we have with United Nations Financial Credit Union, and Bright Tax clients become automatically eligible for an account with that banking institution, which is otherwise only available to UN employees. So that's a solution we're offering to our clients, that you can sign up and get an account with that bank. The challenge that people from abroad face in setting up a bank account in the US is that they don't have a US based address. So the UN, the United Nations Financial Credit Union, will allow you to open an account even though you don't have a US based address. So that's the unique feature of that relationship, and it's something that we offer to our clients at Bright Tax.
Okay. I'm sure there'll be other questions on that, on these issues. Yeah, go ahead.
I see the questions popping up at the bottom, and we'll pause to answer some of those after we get through the CARES Act. But let's move on to the ins and outs of the credits itself. The CARES Act rebate, the economic stimulus rebate, is actually intended to be a 2020 tax credit that we will actually go through the process of calculating on next year's tax return, on your 2020 US tax return. And so if for some reason you do not receive the credit based on your 2019 AGI, but you do qualify based on 2020's AGI, which has changed significantly for many people because of the global circumstances, people are losing their jobs and client relationships are going away. So there's been a dip for many people in their income in the 2020 tax year. In that case, you will be eligible for the refund when you file your 2020 tax return next season. So in January, February of next year, when we're beginning to process 2020 tax returns, at that stage, you will be eligible for the refund. If for some reason you're not eligible right now and it doesn't get paid out. The reverse is not true, and this is also good news, because there are people who will qualify in 2019 based on their AGI, but don't qualify based on their 2020 AGI. So that sort of taxpayer does not have to worry about paying back this rebate in next year's tax return either. So they can pay you in advance, but you don't have to worry about paying them back next year. What is the most important action item for you as a taxpayer at this time? And we suggest what you need to do is make sure you file your 2019 US tax return as soon as possible. It's really important to get something in the system, get something current in the system, particularly given the language that the legislation says may be based on 2018. If it ultimately is not, it'll be that those people that have their 2019 US tax return in the system, when the cutoff date comes. Again, we don't know when that cutoff date will be, but when that time comes, those who have their 2019 return filed will be benefiting from this rebate.
Okay. This one thing, I know that I've seen questions here in the morning session. This is confusing stuff, you know, calculating how much did my AGI was this year, how much it was that year, last year, how many dependents I have, what my income was, all this stuff, how the benefit may phase out, all these things. Confusing. And people will say, wait, before I file, I want to make sure I'm getting money, or I want to be as sure as possible that I'm actually going to get money. Because we're not doing this exercise so you can watch our pretty faces. We are doing this so you can out there get money that you really need, because of the situation. So what you talked about, some consulting or some kind of arrangement where people can call you up, and you're obviously going to get lots of emails because people are just asking all kinds of questions. But what can you offer people who want to know what is the likelihood of them getting money and then proceeding from that?
Right, right. So we understand that not everybody needs a tax preparer or wants a tax preparer to do their returns, but there are obviously a number of questions that are coming out of this potential opportunity. So what we offer as a firm is consulting services with a 30-minute phone call or a brief consultation with a CPA at Bright Tax. You can have a conversation, understand if it makes sense for you to file, as some people will be prompted to file a tax return this year who otherwise wouldn't qualify for or be required to file an income tax return based on their income. So you can have that sort of consultation, and if it ultimately does make sense for you to file a tax return and you wish to engage our service, we'll credit that consulting fee to your tax preparation, which is a flat rate preparation fee that can be found on our website. We can answer those sort of logistical questions later on, but it's of course important for you to know what to expect as you go into the tax preparation exercise, and we can certainly offer those services up
Great,
front.
thank you.
So there are, in the CARES Act are a number of additional provisions, changes that maybe aren't as relevant to you as a taxpayer as the stimulus check, but certainly they're important to be aware of as you do tax planning and manage your finances through this situation. So I'll share a few of those with you so that you're aware of them. And the first is that those taxpayers who have coronavirus related expenses of up to $100,000 can take a penalty-free distribution from their qualified retirement account. So that's more commonly known as your IRA, your Roth, your 401k account, where traditionally a distribution from those accounts would mean a 10% early distribution penalty for you. As long as you can justify that those expenses are coronavirus related, then the early penalty fee is waived. Additionally, you can recognize the income related to that distribution over a 3-year period. So rather than getting hit with a $100,000 income amount in 2020, you can recognize that income amount equally over the next 3 years. Also related to retirement accounts, the required minimum distribution, also known as the RMD, has been waived for the 2020 calendar year. So you are not required to take a distribution from retirement accounts that would otherwise have that requirement. Another fun one that I actually really liked is the change related to charitable contributions. As many of you know and have noted, in the 2018 and 19 tax years, your standard deduction jumped to just about double what it historically was. And that change perhaps kept people from making charitable deductions or charitable contributions as a means of reducing their US tax bill. And the CARES Act actually allows now an adjustment as of the 2020 tax year to your taxable income for your charitable contributions, even if you are taking the standard deduction. So up to a $300 charitable contribution can be directly deducted from your taxable income. Another interesting one relates to employer payments of student loans. So if your employer pays a student loan on your behalf, you can exclude up to $5,250 of that payment from your gross income. So those are just a few relevant changes. Of course, there are many more, but I've chosen just a few that are relevant to Americans overseas.
Okay, so now we are in the, we're going that is the end of the presentation part. Now let's go to some questions and answers Why don't you let her go? You know, Katie. Yep.
Perfect. Yep. So we've talked through the CARES Act and what that means. So let's, what I'm going to do is look at the Q&A. There are a lot of questions coming through. So I'm going to try and answer as many of them as I can. I'll choose questions that are relevant to the greater audience rather than those that necessarily have specific numbers and relate to a specific taxpayer situation. The CARES Act on let's see, anonymous attendee says the CARES Act says that for incomes above 75,000, the amount starts to phase out. That's correct. So if you're a single taxpayer and you earn your AGI is above 75,000, the amount that you're paid in a relief check begins to phase out gradually up to the $99,000 AGI mark. So you can expect that what would otherwise be a $1,200 payment will gradually reduce until you get to $99,000 in AGI. And based on your specific situation, you can determine what that check would be expected to look like. That being said, I know Forbes, if you Google, Forbes has a really great calculator out there that you can input your filing status, your AGI, and it'll tell you what you can expect as far as a payment goes. So I have a question that says, if you're a foreigner with a green card, permanent resident of the US and working in the US, are you eligible for this payment? And yes, you are. As a green card holder and a permanent resident of the US, you are considered to be a US person, and that therefore makes you eligible for this payment. Karen asks, is it a credit or will they actually be sending a check? They will be actually sending a check or direct depositing the amount to your US bank account that the IRS in theory has on file. But you can expect that check to go to the address that is on your 1040. So the mailing address that the IRS would otherwise correspond with. Are these benefits taxable? That's a really good question, Marissa. The amount that you are to receive is considered a credit, so it is not taxable income on your 2020 tax return. What year is the age of dependence based on, 2018 or 2019? That's a really good question. I would expect that 2019, the age as of 12/31/2019 is the relevant age for purpose of this rebate. We won't know the final answer until the IRS begins to send out payments, however. Some of these details have not been clarified by the IRS, but I would expect that it'll be 12/31/2019 will be the relevant date, as that is the most recent tax return. I have a baby due in August. Does it qualify for the dependent benefit? Again, I would expect no, because you will not have a dependent as of 12/31/19. Married filing separate people, are they treated as single under these criteria? Yes, the answer is yes. The $75,000 threshold will also apply to those who are married filing separately. Can we file our 2019 tax returns now to ensure receiving the $1,200? Yes, that would be my strong suggestion, is get your 2019 return filed as soon as possible, as you suggest, Thomas, to avoid the ambiguous language regarding the 2018 return may be utilized. So I would suggest that the best course of action is to file a 2019 return as soon as possible. Let's see, what if your bank account is within your country of residence? The IRS will only direct deposit to a US-based bank account. So the traditional US account with a routing number and an account number that we would input onto a US tax return to otherwise direct deposit a refund. So you would want to ensure that you have a US based account for that purpose. I'm up to date on my last 4 years of taxes. Will I receive the credit? Yes, we would expect you to receive the credit. Compliance is key here. The IRS needs to have something in their system to know that you're out there and to be able to therefore disperse a payment to you. One exception to that, which we can talk about, is US recipients of US Social Security benefits. The people who reside in the US or abroad, regardless of where they are in the world, they, those who receive retirement Social Security benefits and only Social Security benefits do not have to file a tax return to the IRS annually, assuming that's their only source of income. In those cases, the IRS already has you in their system. They already have your address on file or your account for direct deposit on file, and therefore you don't need to do anything. There is, however, another group of taxpayers who isn't filing a tax return, not because they have just Social Security benefits, but because they don't have income at all. The IRS guidance today, which could change in the next few days, is that those people, to qualify for this rebate, do need to file a tax return. So let's say I am a 2019, I'm looking at my 2019 tax filing requirements. I'm earning as a single taxpayer only $4,000 in wages for the 2019 year. I wouldn't have to file a US tax return because of my income level. But because of this rebate, to put myself on the IRS radar, to qualify for this rebate, the IRS is suggesting at this time that that sort of taxpayer do file a tax return to report their income. So that is a variation with standard procedure, where somebody would want to file a tax return even though they're not required to make sure that they're eligible for the rebate. Okay. How are you doing, Monty? Are you getting a lot of questions on your side too?
I'm answering in chat and answering what I can, but you're the boss here, so
Okay.
Yeah.
Should we move on to deadline questions, and then we'll try and keep up again with the Q&A?
Yeah, you're the boss. You do what you want.
Okay, perfect. So let's change to the next slide, and we'll talk a little bit about deadlines. Okay. As many of you know and have read about in the news, the IRS has extended the 2019 tax return filing and payment date to July 15th. So that deadline applies to both US citizens and taxpayers in the States and abroad. Many of you already qualify for a 2-month extension to June 15th because of the fact that you reside outside of the US. That 2-month extension is considered to be an extension that we do in fact elect to take. So your original due date is April 15th, and therefore this additional extension to July 15th, or this revised deadline, I should say, to July 15th does apply to you. Any thoughts on that, Monty?
No, you're right. Even though we do say that it's an automatic extension, so that means, you know, that lets us make us wonder: are we April 15 filers, or are we June 15? And if we're June 15, do we fall under this extension to July? And the reality is that it is considered an automatic 60-day to June 15th, but it in reality is not. It's automatic if you put something in your return saying that you're qualified for it, but de facto it is considered automatic. But if you do not, if you just file on July 15th, and possibly, as you will see, and just in that July 15th, maybe say something here in the last slide that you did not take the 2-month automatic extension, just to be on the safe side, then July 15th it is. It's pretty safe to assume that July 15th is fine.
Right, and as a practical matter for our clients, what we do is we put a statement on the top of the 1040 that says taxpayer resides abroad, and then we add a little statement at the end that says they're granted a 2-month extension as a result of that. So for this purpose, we'll leave that statement out to ensure that you are in fact filing a July 15th timely return, noting that the July 15th extension applies to filing and payment of your tax. So if you don't make a payment for your amount due until July 15th, you will not have to worry about interest nor penalties. I think that's of importance for many people.
Okay.
Also related to deadline changes are many clients or many taxpayers who reside outside of the US also have a US state filing obligation because of a rental property in the States, because of a maintained residency in a number of states. So it's important to keep an eye on what the states are doing. Most US states are following suit with the IRS and saying, we're also going to extend to July 15th. There are a few variations. One example, I think, is Colorado. I saw they've extended their filing deadline to July 15th, but their payment deadline is October 15th. So just keep an eye on your state filing requirements as well to ensure that you're not missing anything because of an assumption that the IRS is doing the same thing as your state filing. If you intend to need an additional extension beyond July 15th, which is very common for those who reside abroad because of their foreign tax returns needing to be prepared and submitted first, the deadline for that Form 4868 extension is also July 15th. So your extension to October will go out. As long as it goes out by that date, you are still considered to be filing in a timely manner. This is an interesting provision in the way that the act and the extension is written. And this applies to taxpayers who have to make quarterly estimated payments to the IRS. So those who owe tax to the IRS year over year are required in many cases to pay the IRS in quarterly installments throughout the tax year and true that up amount at the time of tax filing. The extension from April 15th to July 15th also applies to your Q1, your first quarter estimated payment for the 2020 tax year. So the payment that you ordinarily would have made on April 15th is now postponed to July 15th. However, the Q2 estimated payment is still due June 15th. So there's a bit of variation there to keep an eye on. There's still, at least as of today, IRS guidance is always forthcoming, but as of today, your Q2 payment is due June 15th and Q1 is due July 15th. So make sure to keep an eye on those. A common question that we've been getting from our clients is, when do I have to make my IRA contribution or my health savings account contribution for this year? And the deadline for those contributions has also been extended to July 15th, so you can delay that contribution to align with your tax filing deadline. And the FBAR, the famous FBAR, everybody is asking about that as well. The standard filing deadline for an FBAR is April 15th, but if you read the instructions in the FBAR, you'll actually note that there is some fine print that says the true deadline is October 15th, because if you happen to miss April 15th, the Treasury will automatically extend your deadline to that date. To October 15th. So while in theory FBARs are due on the 15th of April, in actual fact we have until the 15th of October to file those in a timely manner.
Okay, so I think that is the end. So thank you. Okay, well, before we thank it all, let's go back to the questions. There's tons of questions, and then we'll thank Katie for her great job today. And yeah, please go ahead.
All right, so let's dive into some of these questions. One is I received Social Security to a US bank account. If that's the case, then you can rest easy that the bank account is on file, and therefore the stimulus rebate will also go to that bank account. It can't hurt, though, in that case, to visit the IRS website when they set that up and it's live, just to double check to make sure your account information is in fact accurate. Andrea asks about quarterly payments. I think we've answered that. So your Q1 2020 estimated payment is now due July 15th. Here's one for Monty. Has the Section 965 payment deadline been extended?
Yes, it has been. It has been extended as well to July 15th. Again, now we get into, if you do not file an extension till October, the answer is yes, July 15th. There's some gray area. If you file in October, then are you an April 15th shareholder? But let's just assume that if you file up until July 15th and don't ask for another extension, the answer is yes. They specifically came out on that. Yeah, go ahead.
Okay, perfect. Let's see. Yeah, we have this question about Social Security. If my only source of income is Social Security, you do not need to file a return to be eligible for this rebate. Okay, here's a good one. And this has come up a few times in various places. If I file a joint return, but my wife is not a US citizen, will she get the $1,200? That depends on the residence status of your spouse. So if your spouse is a non-resident alien and you've elected to file jointly and elected to treat your spouse as a US citizen for tax filing purposes, you are not eligible for a rebate. That's the one very specific situation which we don't expect you to be eligible for a rebate. If you file jointly with your spouse, who is a green card holder, then yes, you are eligible as a tax filing couple for a $2,400 rebate. Is the benefit taxed in the UK? That is outside of my range of expertise. I can talk all day long about US taxes, but I do not know how your local tax system will treat the rebate amount. Let's see. What is the deadline to apply for this rebate? There's not a specific deadline per se. And there's not a cutoff date that the IRS has communicated to us that says, as of this date, if you have a tax return in the system, you will be eligible. So we're still waiting for that information. The time may come where they say that date was 4 weeks ago. We don't know. We're, of course, following it very closely for updates because it's important to get as many clients as possible in the filing system for purposes of eligibility. So the best advice I can give is be sure you're compliant with your US taxes. What benefits are available for US-based LLCs? That depends on the way that your LLC is treated in the US for tax purposes. It could be a disregarded entity, and if that's the case, you're filing your LLC's income on your own tax return as an individual filer. So the answer is you as an individual filer are eligible for this rebate, but this is not a business based rebate. So if it would be for you as the individual taxpayer, not your company. I have a child who is an overage dependent. Will I receive $500 for her? The answer is no. The dependent must be under age 17, so age 16 or younger for purposes of this rebate. Besides filing taxes, are there additional paperwork or forms that need to be filed, or is it automatic? Our understanding right now is that it's automatic. So again, the best thing you can do is be compliant with your US taxes. How do I tell the IRS to use a different bank account? That will all happen in the IRS's platform, where you can inform them of the changes to your US bank account. I have not filed for a few years, but if I file 2019, can I still qualify? This is a really good question, and it's one we're getting a lot, because all of a sudden, Americans who reside outside of the US see this light bulb go off where they're potentially eligible for money from the IRS. So it's been 10 years since they've moved out to wherever they might be, and all of a sudden they have this incentive to file a US tax return. What I would be very careful about is all of a sudden popping up on the radar with the 2019 return and taking no further action after you've done that. In the tax world, we call that a backdoor disclosure. And there are cases in which that's a sound approach. But generally speaking, it's best to use a procedure such as the streamlined procedure to ensure that when you do come back into the IRS system, and when you do pop up on the IRS's radar, you've done so in a way that prevents the IRS from penalizing you. So you don't want to get into a situation where you file 2019, the check shows up in the mail, and then 2 years down the road, the IRS sends you a notice and says, well, where's the last 12 years of tax returns? That's something we want to avoid, obviously, because that would ultimately cost you way more than the benefit of the rebate itself. So in that case, I would certainly recommend seeking out advice to speak to your personal circumstance, because everybody's situation is different. The streamlined procedure is one really great way of getting back into the system. It's one that we use at Bright Tax every day, all day. It's outstanding. But of course, we need to know the particulars of your situation to be able to advise as to whether that's the most appropriate path forward. Okay, let's see. Does the charitable contribution have to be given to a US-based charity for purposes of the $300 adjustment? The short answer is yes. However, there is a listing of foreign approved charitable organizations that the IRS allows that deduction for. So unless the IRS approves the charity you are contributing to as a qualified organization, then that deduction wouldn't necessarily be deductible or includable in your US return. Does an extension filing count as filing 2019 taxes? And the answer is no. But it is important to ensure that you continue to stay compliant. So what you don't want to do is let the 2019 tax filing deadline pass. You don't want July to come and go and have nothing in the system. Okay. Is AGI dependent on US dollars or the income of your resident country? As a US taxpayer, assuming you're a US citizen or a green card holder, you are required to report your worldwide income to the IRS on an annual basis. That doesn't mean that you are going to owe tax on the entirety of your income. And as Monty suggested, there are many people abroad who don't owe tax at all because they're paying high enough tax in their country of residence. And we go through the exercise of really proving that to the IRS, which is required to be able to take advantage of those provisions, such as the foreign tax credit, the foreign earned income exclusion. In order to take advantage of those, you have to prove them. You have to elect and include those forms on your tax returns. Otherwise, the IRS can say, you haven't shown this to us, so we're going to tax your worldwide income as if you had earned it in the States. So yes, you're required to report your worldwide income. Your AGI can vary based on the foreign exclusion. And it would be a US dollar amount, so we would convert to US dollars, of course, based on your worldwide income and relevant adjustments to income. That's the short answer to that question. I'm going to go back down to the bottom. What exchange rate is used to calculate AGI? The IRS accepts a variety of exchange rates, but as long as the rate you're using is a published rate, and it's of course in line with other published rates, such as the US Treasury, historical exchange rates, or the IRS's average annual exchange rate, which we most frequently use for income, then that's fine. They will accept a reasonable exchange rate. I filed for 2018 and 19, but I need to double check previous year's filings. The best way to do that is to request transcripts from the IRS or call them up. But right now, as many of you know, the IRS is basically operating at a bare minimum. It's impossible to get them on the phone. We've found that out over the past 3 weeks and trying to contact them for a number of client issues. So there is an online system in which you can request a transcript. And in your case, you would want to request a record of account to see if there's a tax return registered in the system. AGI limitation before or after the 9/11 exclusion. This would be after the 9/11 exclusion, as AGI is after the foreign earned income exclusion. As a self-employed person living outside the US, you are eligible for the refund or the rebate as long as you fall within the criteria for income and you are a US taxpayer. The address of the IRS website. Monty, do you mind going back a few slides to where we had published that? It's irs.gov, and the coronavirus related.
Yes, 1 second, let me find that.
Let's see.
There
it is.
irs.gov,
and then the coronavirus specific information can be found by adding that coronavirus tag to the end of it. I think the last update came out about a week ago, so there's not a lot of new information. Well, maybe for us tax professionals who are checking it every single day, but that will have the most recent and updated guidance. So we strongly suggest visiting that for the most current information about the rollout of these rebates.
Okay, well, we're approaching the hour, and I know that Katie has, I do too. I have a curfew, a countrywide curfew. Katie has other obligations. So Katie, you can answer, 1 or 2 or whatever you want, but basically, thank you very, very much to you and to the good people at Bright Tax who really did help out. I'll let you go on. The recording will be available, as I said, for Arrow members, but you will get a copy of the presentation from Bright Tax. They'll send you a copy of the presentation. Yeah, so just you call it, Katie, and stop when you want, and that'll be it.
Okay, perfect. Yeah, I'll answer a few more questions, and then I'm sure people will start to jump off because they have their own personal
Right.
and professional obligations, but I know it's important to some of you to get answers here. I see a lot of familiar names here on the participant list as well, so those familiar names know my email address and where to reach me. So I'm happy to answer questions that way as well, but a lot of the questions I'm seeing are perhaps repeats of what we've discussed.
Okay, so let's end here. I think that it was a very good session. I see a lot of thank you. So thank you, Katie. Thank you, everybody, for attending. We both wish you really, to get over this, healthy and, what can I say, crazy times. But thank you for joining, and until we meet again.
Thank you.